There we go, mate. Just the right hand button.
Thank you, Mark.
Cheers, mate.
Big round of applause for Mark putting on an event like this. Well, thank you very much for welcoming me to Ming today. So I want to talk about a number of things today. I've got a session afterwards, after lunch, on commercial conversions. But I want to talk about maybe challenging tradition beforehand. And that led me through to challenging every part of my life when I left corporate life after 25 years of running business around the world. But the one thing that has always been constant for me is understanding that I'm playing the long game. So I thought a little bit of an anecdotal story about endurance and the impact then that endurance can have on your life. So my background, I'll come to that in a short while, but I had a very mentally taxing job. I was running probably a team of 5,000 people around the world. I've worked in 33 countries. Very manual, very intensive mental game. But that left very little time to look after the really important things in life, which was my health, to be honest. So rather than focus on that, I decided, well, something's got to change. Yeah, if something's got to change, you've got to do something different. So I, back in 2009, I decided, right, I want to be the fittest I've ever been by the time I'm 40. So I decided to do an Ironman triathlon. For those of you not too familiar with Ironman triathlon, I did mine in Lake Zurich and the surrounding area of Switzerland. So that's a 2.4 mile open water swim, 112 mile bike ride, and then a marathon. I really wanted to push myself out the comfort zone. Somebody said you can never have too much carbon in your life as well, so it got me a great chance to get a nice road bike as well. But this is about playing the long game. Lots of focus for me, but actually the swim I found a bit boring. Cycling was just too much kit. I really enjoyed getting my muddy trainers on. So I set out to become a ultramarathon endurance athlete after joining the finishing line of Ironman Switzerland. And again, I wanted to get to the bottom of my reserve tank. I don't think many of us actually truly know how much you can achieve with the power of your mind and your body. So I signed up for an event in 2011, the Marathon des Sables. Maybe you've heard of it, a 270 kilometre race across the Moroccan Sahara Desert. So that was a bit of a challenge for me, and I had to start thinking very differently. I think it's a great example of when you set your goals so high, you have to go about it in very different ways. My training, I'd spent a little bit of time in the military, in the TA back in the 90s, and the mantra there of train hard, fight easy was always something that left an instilling memory on me. So part of my training was doing 100-mile races in a day, some 50-milers. My training runs would quite often be back-to-back marathons over a weekend and another 30, 40, 50 miles during the week. So really pushing myself out of my comfort zone, lost about 3 stone in weight, and drilling down into my nutrition. Again, trying to play the long game, trying to use these events to instill great habits that would see me last a long time. Just give you some idea of some of the visuals there. It's a self-sustaining race, the Marathon des Sables across the Sahara. So that's my kit list. You carry every morsel of food that you're going to eat or you're sleeping, everything. So around about 14 kilos in weight, and then add your water on top of that. So when we say run, it's more of a bit of a waddle really, but across the Lawrence of Arabia sand dunes. If anybody thinks the desert, by the way, is those rolling sand dunes, quite frankly, it's a sand and gravel pit. It really is. We did have sessions of maybe 20 miles of pure sand dunes, which aren't the most pleasurable experience. But you certainly learn grit. We are just before lunch. Look, a few blisters never took anybody out, but it does kind of spoil your day a little bit. That was at the end of day 3. So I still had another 3 days running there, including a 56-mile double marathon in 54-degree heat. But taking care of your body, taking care of your nutrition, looking after the things that are important. A few blisters, losing 6 or 7 toenails, okay, it might be mildly inconvenient, but when you set yourself up on a goal, a long-term goal, you'll wear anyhow. And these are 6 lessons that I've derived from my ultramarathon days, which I think are relevant to every single one of you here. As entrepreneurs, you're all in the business of property. Number 1, you so often overthink what you can achieve in 12 months and underbelieve what you can achieve in 5 years. You know, we're playing the long game. When you've run for literally 18 hours non-stop, just stop to fill your water bottle up, your whole body just wants to curl up under a hedge and go to sleep. Sadly, there aren't any hedges in the Sahara. So you've just got to keep going, one foot in front of the other. And it's the power of adding the mind and the body, that mental space, that will take you to achieve incredible heights. Great daily habits, you know, real quality habits that you build on. Having that huge goal. Having a huge goal means you have to go about achieving that goal in just a very different way every single time. A positive mindset goes without saying, and to have a positive mindset, I need to surround myself with positive people who aren't going to be a drain on me. Clearly, there's no point in running fast if you're going in the wrong direction, so you just need to have that laser-like clarity on your direction and just that relentless pursuit and belief that you can, that you are enough, you can. I've got 4 kids, I've got 2 young daughters, and that's really important for me to instill in them that inner confidence and self-belief that they are enough in today's world, where they're being bombarded by social media images, and you know that route to perfection makes them feel, you know, undermined and lack of self-worth. So you know that relentless pursuit of being enough. And look, final point here is there is no pain at the finishing line. You know, what are you prepared to go through, that nitty-gritty element to achieve your goals? Why do I push myself so hard in business? I did my degree in construction at Sheffield City Polytechnic way back when. And I went to a football match, an FA Cup semi-final one day back in '89, which turned out to be the Hillsborough disaster. And of all the trauma and drama of that day, you know, there's a huge amount of loss. 97 people would end up losing their life on that day. And it sears something into your soul. And what it seared in my soul for me was that, you know, I need to leave nothing on the table at the end of my life. I need to live life to its absolute full. When you've looked a 10-year-old in their eyes and seen them draw their last breath, it can't help but alter you. But how do I turn that into something positive in all that negativity of the day? And it took me many years to do that. But my mantra ever since that day is to live a life well lived. And I live that with a passion. If I go for a run, it'll turn out to be a 50 or 100 mile run. Skydiving, rather than do a tandem jump, I became a free fall skydiver in my 20s. That's me. I became a skydiver, and my passion was jumping out of helicopters. That's me coming out the back of a Soviet freight helicopter in the south of France, and just absolutely giving it everything. So whether that's going to the highest mountains, going to the bottom of the oceans, just living life with a blessed passion and learning at every single stage and event. And that led me to looking at the creativity in every opportunity. There is a whole smorgasbord of opportunity in the world. We have to be careful which ones we choose, but that creating opportunity, we also be mindful on how we fund that opportunity as well. My background over 30 years, I've built over 4 million square feet of technical infrastructure. I was doing commercial conversions in the early 90s, warehouses to data centres, to power stations, to renewable energy. Around about 1.5 billion spend I've had at the end of my pen over my corporate career. Raised a lot of capital, about £30 million of private capital, and well in excess of 100 million of institutional capital. That's all since I left corporate life in 2015. Not seen everything, but I've learned every experience. Every scar has a value. I've not done everything right, but I've always had that passion to believe I'll never make the same mistake twice. I'd also been a mentor, a non-exec director, and a shareholder in businesses, as well as a board director since 1998. And again, that seasons me with a different perspective. And as a corporate troubleshooter for many years, to have the calmness under pressure. So many times I've had to reach for a bayonet and a tin hat and jump in the trenches to really solve some very challenging corporate issues. But my genesis was way back when I finished my construction degree, and I was approached by this gentleman here. His name's David McCourt. David McCourt is a billionaire. He's an Irish American. To give you an idea of the scale of his vision, David is currently doing a €5 billion scheme to take fibre optic cables to the rural community of Ireland. The guy just thinks on a different level. And when I left university or Polytechnic, British Telecom were losing their monopoly on the old copper networks. And David was responsible for bringing hundreds of millions of pounds of US finance to bear in the UK. And my responsibility was to be his first employee in the UK to put fibre networks across initially London, then all the principal cities around the UK, then across Europe, and then into, I used to run Asia Pacific as well. But it taught me having a massive vision. I mean, so big, it's scary, it scares other people, it scares you. And there's a guy who just drove that relentlessly. But I've also experienced the greatest highs. I've also seen failure. And I also know that failure also brings opportunity. So my employer was eventually taken over in a series of mergers and acquisitions, something that would shape my future life. But this is an example on the left, a data centre. It was the largest data centre we ever did. It was about 25,000 square metres. So we're talking about absolutely immense, 250,000 square feet. And we put a mezzanine in there as well, so we doubled it. But eventually, come 2001, does anybody remember WorldCom? Yeah, a few of you nodding their heads. So WorldCom filed for Chapter 11 protective bankruptcy in the US. I got a call. I was pretty used to the Houston, we've got a problem call as a corporate troubleshooter. Had to run a very systematic business because I would get that call to say, Mark, need you at Heathrow. Your tickets are waiting. We need you in another country in 4 hours' time. Go and sort this mess out. We need boots on the ground, eyes and ears. Go and work out a problem. Normally that meant coming back, reporting to the board, and they would like the plan, and they'd say, okay, well, that's a great plan. Can you go and sort it out and deploy the plan? So with this particular call, I was asked to close down the entire infrastructure business in the world. So that entailed making 450 people redundant. It was turning over $500 million US at the time, and was also had quite a lot of third-party business. Very traumatic to go through that process, systemize and close that business down. But what I'd also say, it amounted to an awful lot of opportunity. I've created a lot of businesses, but not many people have the privilege to close down businesses and do it in reverse. And that was, again, one of those milestone opportunities that I took. And the other thing I took there, with all the corporate greed that went on in WorldCom, talking about gold fittings for shower rings and things like that. We tend not to have those in our HMOs, do we? But that's what sent some of the C-suite of WorldCom to prison for over 20 years. In fact, some of them died in prison. Was the ability to make profit, not at the expense of others, but make profit whilst serving the greater community. And that's why I've spent many years now in social impact investing, and we'll see a few examples of that. So throughout all my career, I've been an entrepreneur. In my 25 years of corporate life, seizing opportunity. David called me once and said, I've got a chairman friend at Cellnet. They're looking for 2 wireless base stations to be built. You've seen these towers up and down the motorways. Not big, about £30,000 each. He said, can you go and just sort them out? So we went and sorted them out. Actually, I saw an opportunity to acquire, design and build these, and we built a business that turned over 22 million at its highest, and it was a business that I went through a management buyout with in the late 90s. So that entrepreneurial flavour was a privilege I had whilst also being in full-time employment. 2001, after I closed the US business down, I looked at structuring in a very different way. Has anybody seen the mighty vans around the country? Yeah, catering, cleaning, pest control. So I approached the PLC board of Mighty with a business plan. What many of you may not know is that Mighty is an acronym, like many things in life. It stands for Management Incentive Through Investment Equity. So I put a business plan to Mighty, to the board. The board accepted it. This was a technology division looking at design and build of data centres. We worked out the working capital and I bought my way in. I put in 49% of the working capital of that new business, and Mighty put in 51%. And over the subsequent years, we grew that business to a turnover of just shy of 60 million pound turnover. And I sold my shares back to the UK PLC, still kept my job, and they then asked me to become a non-exec director and help drive their mergers and acquisitions programme. So again, different ways of funding and structuring deals. And I've always taken every opportunity to challenge tradition there. You know, just because you might not have the funds available to do the most amazing schemes, the funds are out there. You've just got to work out the different types of structure that are available to you. So I became a full-fledged entrepreneur when I left corporate life in 2015. And I wanted to set out that multi-generational legacy, not just for myself, but my family, loved ones, and my friendship group as well. So really enjoyed that process, and that helped me galvanise all the energy and all the lessons I'd learned, the good lessons, the positive, and also the challenging lessons and experiences over those years. And I set out a series of goals which still hold true today. I'm not there yet, but we're getting there. These are 15-year goals, and they'll take me to 2030. In the process of backing 100 businesses. Okay, I love identifying great talent, working with great talent, and seeing great talent achieve more than it ever thought was possible. That's one of the greatest privileges I've seen in my life. I want to impact and help 10,000 entrepreneurial successes by 2030, create 100,000 homes for the community through myself and through the organisations that I back. And most thought-provoking of all is to create 100 million social impact nights. I believe nobody should have to sleep in a cardboard box in Poundland's doorway, and certainly some of the great work Mark's doing, helping alleviate homelessness, absolutely on that mission ourselves. So this is a portfolio of some of our companies. Many are involved in property. Some not. We've got a quantity surveying company, we've got a development company, we've got a training, mentoring company, and I've got my own family investment office as well. Let's look at the QS company. I've been a shareholder of this QS company since it was created. It does cost management services, works for banks, contractors and developers. But we've got to a point now where 12 months ago we identified we need to scale very significantly. So how do we take different levels of structuring? How do we approach that? Do we find the greatest individuals that we can in the country and scale that way? Well, what we've decided to do is to franchise. And we're going to franchise the QS company around the country. We're looking for 35 to 40 exceptional individuals, maybe got 10, 12, 14 years of RICS experience, but maybe reached that glass ceiling or fed up of corporate politics. So again, it's a different way of scaling your aspirations, digging deep. I don't have a franchising background, but surrounding myself with great body of working professionals who can guide me through that. And again, it's that challenging tradition at every level. Likewise, with our development organisation, we've created over 300 apartments over the last 6 years. Of course, it's been quite a challenging 6 years, given COVID and given where interest rates have gone and some of the political sabre rattling over recent months and years. So we're holding a lot of units. We would have probably, in hindsight, preferred to have sold those units, but we've had to dig deep holding those units, and we seized an opportunity there where we're internalising the block management and in due course the lettings functions and growing that now at scale. And we are acquiring completed blocks of apartments, anywhere between 15 and 100 units at a time. And in fact, we've got 4 offers went in last week for a total of 200 units. So we never had any problem with finding the deals, designing and building the deals. Our challenge was that we couldn't control what happens to the world. It changes underneath your feet in that 18 months to 24 months when you're doing the larger developments. But I'll talk more about that a little bit after lunch. So I needed to change in 2015 my mindset on wealth. I'd got vast experience in corporate life, but I was a one-trick pony. I literally had a job like pretty much everybody else in the country. I was taxed at source and highly tax inefficient. I was working 60, 70, 80 hours a week. I saw a huge amount of the world, or should I say, I saw a lot of taxis, hotels and board meeting rooms. So yes, there were privileges with that, but something had to change, and it was my mindset of wealth. And the first thing that needed to change was I saw wealth as money. And actually, of course, it's very different to that. First of all, the wealth mindset has to have that why. You know, what is that central focus and point? And for many of us, myself included, that's family. That really is. But then there's health. Health, without health, money is absolutely irrelevant. You know, in 25 years' time, if I could give you your health back that you enjoyed, 20 years ago, you'd give me every penny you had. We all would. So health, number one. Financial, not just cash flow, but net worth as well. I focus and measure both of those. My time. When you're time poor, you really undervalue where your time goes. So I've had a radical overhaul there and focus on my time. And my return on time employed is one of my most important KPIs. Relationships, of course. I've been married to Sharon for over 26 years now. Some of those times haven't been easy because some of the pressure that I've had put on me and made the choice to absorb have come at a cost. They've come at a cost where with my 4 children, I probably didn't see some of my younger children or didn't enjoy some of their early years. And that's a constant regret for me. But look, we're not going in the past. I can only affect the future, but I can certainly learn from the past. So since the 2 girls came along, I've been a lot more present in the moment as a father. And then my personal aspirations. I'm very highly wired and driven. I think going back from my acute experiences at Hillsborough and times like that, I genuinely appreciate that time is important, our health is important, and every living day is an absolute privilege. And then once you have those 5, you have the ability to help others. And I believe you should help others as well. And if you're going to help others by focusing on the meaningful things in life, and as a consequence you're helping other people, look, it's about creating shared value, and that will radiate. This is my why. I am an engineer, so I do like to line them up in order. They're a bit younger there. You can tell the creative one, can't you? Little Emily. She was 7 then. All the kids are shareholders in our organisation. We have multiple holding structures, holding companies and trusts. But importantly, in our primary holding company, the children are all shareholders. Now, at the age of 7, it would be a pretty tough gig to take my daughter through a shareholders agreement. The point of engaging them as shareholders was I want them all to understand more about being shareholders by the time they're 18 than when I did when I was 18, which you could have written on the back of a postage stamp, by the way. So it's that, you know, that the wheels of compounding turning, you know, one more revolution. I've vowed on a number of non-negotiables in my life. In leaving my career, family first. That was principle. Giving back, valuing my time, not allowing somebody else to put a worth to it. I would do that. Tax transformation, that needed a radical overhaul, I can assure you. And my pension, you know, my largest bank account that somebody else was controlling. And look, I mentioned tax transformation. Look, you must pay taxes, but there's no law that says you have to leave a tip. So I needed to surround myself with great people who understood a boring tax manual, but could actually draw out all the sexy parts of it and enable me to shape and structure my life so I could take advantage of the tax breaks. I don't mind paying taxes, but I've got a lot more faith in myself to channel back tax efficient savings back into society to create social impact than I do any government, I have to say. I consider myself fairly apolitical, to be honest. Yeah, quite frankly, I'm not going to leave my future in the hands of the government to decide. Yeah, a number of different asset classes. I'll probably skip that in the absence of time. But wealth creation to me was super important. And I decided to create wealth creation in a number of forms. Through dividends, equity, cash flow, income, pensions, which I later turned into SSAS, hedging the market, creating great earnings as well, and royalties through my books as an example. So pensions, well, what can I say about pensions? Over 25 years, had an IFA visit me in the shiny suit and pointy shoes, trying to flog me something. I had an innate distrust. I really hated them. I mean, don't even get me started on annuity rates. Just pretty derisory experience, totally unenthralled. And so I decided to take control. 2015, I'm going to take control of my pension, and it's going to be on me, okay? If I don't make the most of it, I've only got one place to look, and that's in the mirror. So I was so passionate about what I found with SSAS pensions that I've written 6 books, all #1 best-selling on Amazon, but the passion there was on SSAS pensions, okay, and commercial conversions. But I couldn't believe what I was seeing and reading, and I was just I found it unbelievable that most people didn't know about SSAS. I don't think people make any fees in the IFA community. Apologies to any IFAs who might be in the room, but that was just my personal experience. So I needed to see something very different there, and I set out that course for a SSAS. So just a quick raise of hands. Who's got a SSAS in the room? Okay. Who's in the process of getting a SSAS? Okay. All right, probably about a quarter of the room then in total. So a SSAS, a small self-administered scheme. You need a sponsoring employer. It's called a director's pension for a reason. So you need that employer, a sponsoring employer, which is generally it's a limited company. It's been trading a year or more. And you can have between 1 and 11 trustees there. Now, everybody familiar with a SIP? Yeah, a lot of heads nodding. So if I just use a SIP as an example and a compare and contrast. So who owns a SIP? Well, the SIP business does. St James's Place own your SIP. You don't. You're fractional investor in that SIP. With a SSAS, you are the trustee. That's what I was looking for. Access. When can you access your pension funds? Well, as a SIP, you can access your pension funds like anybody else at the age of 55 with your 25% tax-free drawdown. With a SSAS, you can access your pension at any age. And you might want those with your notepads out. It's called a loan back. Okay, there are a lot of responsibility that comes with that, but that's a privilege that HMRC give SSAS trustees only. It's the only form of pension that enables you to do that. Property. Can you own a property? Yeah, you can own commercial property in a SIP, absolutely. But in a SSAS, you can not only own commercial property, you can enable any form of property. Can you lend funds? It's quite difficult to lend funds with a SIP, but with a SSAS, you are the bank. I don't particularly like the phrase "you are the bank," but you are. You make those investment decisions. That money comes into your SSAS, going to sit in your bank account and do absolutely nothing until you do something with it. So it's highly accountable. Who is it with? So it's an individual with a SIP, but you can collaborate as a team. You can have up to 11 trustees with a SSAS. Tax efficiency. So quick shout out, how much can you put into your pension each year tax free? 60? Yeah, 60,000. Unless you've got a SSAS. And if you've got a SSAS, you can put in excess of £500,000 tax free. So if you're a business owner, you might want to make a note of that, up to £500,000 a year on top of your £60,000. The good news just keeps on coming. And I can't set you up a SSAS, by the way. Okay? It's the easiest sell, but that's not what I do. Costs. Very cost efficient. With a SIP, you're paying per person. With a SSAS, you're paying per SSAS. And of course, you could have 5, 6, 7, 8, 9, 10, 11 trustees there. So you can see it's pretty compelling. And this is the evidence I presented to myself as to why I should even consider a SSAS. Now, you have to be highly accountable, but entrepreneurs, business investors, we are highly accountable, aren't we? We've only got one place to look if it goes a bit pear-shaped. So this is real focus for you. Barack Obama, change will not come if we wait for some other person or some other time. We are the ones who've been waiting for. We are the change that we seek. I love that quote. We are responsible. There's no entitlement out there. Well, there is a lot of entitlement out there, but entitlement plays no part. There is every single opportunity. HMRC have sent us a gift as SSAS trustees. Who knows what the government are going to do on the 30th of October in the budget? I'm sure they'll have a tweak around, and I'm sure it'll affect other pension trustees or other pension providers a whole lot more than it will SSAS trustees. So it's having that responsibility and accountability to be the best version of yourself and giving yourself the options to achieve. And in my humble experience, I invest in businesses, I acquire businesses, I invest in property, I develop to sell, develop to hold. There is no sharper tool in your toolbox than a SSAS pension. So what is the size of the SSAS market? Well, the pension regulator's data is a bit sporadic, to say the least, but in 2019, there was just over 22,000 SSAS trusts in the country, out of about, 75 million? So it's pretty thin on the ground, not very well understood in the general populace. It's just had its 50th birthday, 1973. Was the earliest day you could have a SSAS. And to become a trustee under UK law, you need to be 18. Okay, 18. So I did some independent investigation and surveys, and around about 350,000 is the average SSAS pot. Some will be 50, 75,000. Others I know have got 2 million or more in their SSAS pension. So there's a whole wide range there. But that puts the addressable market probably now actually well over the 8 billion mark. And within the community that I have and I've established, the aggregate communal funds there under self-management is just over 1 billion. So we're talking about a huge community of people who want to be better than they were yesterday, who are prepared to challenge tradition and prepared to be accountable. And I find that incredibly inspiring to be around those kind of individuals. And bear in mind, you need to have a sponsoring company. So pretty much every one of those individuals, every one of those trustees, every one of those SSAS trustees are business owners as well. They're doing great things. I don't know many people who are full-time SSAS trustees. In my pension management strategy for 25 years, was looking at a statement once a year, thinking that's a bit crap, hopefully it'll be better next year. And I took out that radical transformation to really take ownership and become responsible. And look, as General George Patton said, if everyone is thinking alike, then somebody isn't thinking. And all of my business partners over the last 25 years, I think together we've always enjoyed that challenging tradition. Okay, we have no ego whatsoever. We want the best decision. So I don't care who came up with the idea, but we'll probe it, we'll push it, we'll test it. But when we come to that final solution, whatever that looks like, it will be the best solution that hits the market. No procrastination. We're just getting out there. So I don't want to be in that comfortable, like-minded community thing where everybody's going along the same journey. I want to be in a community that stands up, embrace and challenges tradition. And I think that's what attracted me to the great work Mark's doing with the Ming community. So this is a SSAS asset. This is one that we actually have in our pension. It is 5 commercial units. We took these 5 commercial units. We bought them at a discount. These are assets that weren't on the market, by the way. Okay, the seller didn't even know they wanted to sell. There was 1 unit out of those 5 that was to let. And we inquired, dug a bit deeper. The lender said, well, actually, yeah, okay, I could sell. So we bought all 5. We saw the potential in the uppers as well, 3 residential units, but you can't own residential property in a SSAS, but you most certainly can use a SSAS to enable residential units. And that's exactly what we did in a compliant way. So for me, this was the holy trinity of adding value, really. There were 8 different ways that we added value. Firstly, we found it off market. When it did come round to the owner, he was in his 70s, he wanted £1 million for the cluster of units. And quite frankly, we didn't want to pay £1 million, and we settled on 610,000. So those below market value, whatever that looks like and feels like, accessing great stock is certainly out there. We extended the planning use of not just the commercial, but we also got planning for residential, for the office and storerooms above. This was in a conservation area, so it wasn't PD. This went for full planning, and we protected ourselves with a fully conditional offer. We then subsequently did the physical conversion to residential. What we did was we acquired the whole thing in our SSAS. We then sold the freehold, sold everything out to a limited company, and it was a sale and lease back. We then leased back 5 999-year leases back into the SSAS. So the SSAS owns long leaseholds. We did some infill airspace as well. That's the centre picture at the top. One of the apartments was a bit small, about 36 square metres. So we did this kind of bridge across the top and gained another 20 square metres. We renegotiated all the leases because some of them were vacant. It was highly tax efficient because it's in a SSAS wrapper, and we still hold those units to date. So to me, that was a great deal. We turned 610,000 into a GDV of 1.4 million. So just under $500,000 of, I would say profit, but it was actually equity because we hold those units. And this is the transformation for me. We secured all of my pensions, all of the contributions over 25 years just went in my dull and boring pension. Couldn't do anything with it. It just felt there was no access to it. We then transferred my 5 pensions into a SSAS. I then acquired that one deal in my SSAS, and I doubled my 24-year pension in 24 months. That's the power of taking control of what you can, challenging tradition, taking that responsibility and achieving some great things. And if you want high caliber results, there's a summary here, I call it the caliber model, but you can collaborate with people. You can loan to me, I can loan to you. There's a lot of flexibility there. You can acquire great assets. We acquired shares in a company, an augmented reality company, made a great return on that. You can do loans, you can make investments, you can borrow. But it also helps educate you. It helps you educate others, future trustees maybe. And for once in my life, when I became a trustee, it started to resonate with me. Pensions started to have a connection. And this is the Tea Rose Cafe. This is one of the 5 commercial units we have. And that is the cup of diabetes that my kids have when I take them to have a hot chocolate in that community. They understand at the age of young teenagers, they understand what planning for the future actually looks like. They understand what a pension is, and they start to understand compounding even at those early stages. And that's probably the greatest return a SSAS pension has had for me and my younger family. And I found that incredible. To take old redundant properties and convert them so they'll be long-term enduring assets for many, many decades to come. But look, let's talk about a vehicle. Nobody came out the womb wanting to own commercial property. That's the reality. Okay, commercial property stands for something. It's a vehicle to get us to a better place. Would we agree? Yeah, we want cash flow, we want capital growth, we want leverage, all these great things. So whatever your choice of vehicle is, I use this as an analogy, no good to me, can't fit 4 kids and a dog in one of those. And I've got an electric vehicle, so that's my vehicle of choice now. But it's a vehicle, and as long as we put that into context, I think one of the biggest mistakes that budding entrepreneurs wanting to move into the business of property at a scale like commercial conversions, they think the whole world revolves around property. And it doesn't. We're in the business of property. And I'll touch on that a number of times, and hopefully within half an hour it'll start to make more sense. So what does commercial conversions give us? Well, it gives us scale. It gives us that scale. If anybody here, raise your hand if you've ever had a buy-to-let or an HMO before. Yeah, I mean, they're easy if you say it quick, aren't they? Yeah, they can take 2, 3, 4 months just in the legal process, let alone finding one. So imagine doing 5, 10, 15, 20 at a time. The largest commercial conversion we've done is 57 units. I can't even begin to think what doing 57 individual buy-to-let acquisitions would feel like. So it's that economies of scale that enables us to acquire, and we can drive in value. We are acquiring at wholesale and delivering at retail. That's the power of what it creates. It enables us to de-risk at every stage. Generally, the buildings that we're buying, they're waterproof. We don't have to mess with the foundations. We don't have to mess with the windows. We might have to do a bit of modification, but there's no ground risk. I've been involved in new build for decades, and I know with stark contrast that risk return is very different on new build than it is on commercial conversions. No foundations, utilities are generally there. They'll need some modification, but the whole thing becomes a whole lot easier. And for those of you who love spreadsheets and facts and figures, the left brain thinkers in the room, There is a huge amount of opportunity. Okay, commercial conversions, 7.35 billion square feet of it in the UK at the last count. Nearly 900 billion of value in commercial property. But it's the last numbers. 172,217 empty commercial buildings. Massive opportunity. Would we agree that there's been absolute devastation on the high street with retail premises? Yeah, we call them Amazon shop fronts, don't we? You can have it by 2 o'clock tomorrow afternoon if you order it online. So we have to be very careful on how we acquire commercial property, particularly on the high street, which is very much moving from more of a retail to service in many cases. But there is still value available there. So those empty commercial properties do represent an opportunity because somebody is feeling some pain. They're insuring a property, they're funding a property, they've got business rates potentially on it. So that is our window of opportunity. Having said that, we've acquired around about a third of our units, a third of our commercial conversions, which is about 16 over the last 6 years. About a third of them have been vacant. The rest we've always acquired them as vacant possession, but they've left the building after we've struck the deal. So it doesn't have to be the vacant ones there. So why more than ever? So by 2050, all the buildings that will exist in 2050, over 80% of them already exist today. We are not going to be decarbonising the UK by new build. Okay, this is about repurposing existing stock. It's a whole lot quicker, it's a whole lot slicker. The government are behind. Ian will tell you till the cows come home about permitted development rights, and they're gradually enabling us to do more and more since they came about in whenever it was, 2013. So we've got a huge opportunity to go with that groundswell there. So, this is about repurposing that ageing infrastructure. I've written a couple of bestsellers on this book, and the one on the right, I published that one. That was my first book in late 2017, early 2018. But the latest one, Game Changing Commercial Conversions, that came out in January. And that was a consolidation of 19 of industry associates, mentees, people that I know, like and trust. And I reached out and asked them if they'd like to write a high-profile chapter each on their very, very brutally honest opinion of commercial conversions, what it meant to them, what they achieved. And to me, that was one of the most inspiring books that I've read, because it showcases the grit, the toil and the courage that it takes to step out there into the arena. And the reason why I call it creating shared value is I want you as the commercial conversion specialist to understand that you are the catalyst of value. Unless you take that big step forward, nobody else makes a profit. Nobody. I'll just do a little quiz here. How much profit is there in a development as a percentage? Just throw me out some numbers. 20%. 20, 15, 30? 25? Okay. So the question I asked was, how much profit is there in a development? The answer you gave was, how much profit is there for the developer? Now let's reanalyze that question. Who creates value because we've stepped into the arena and we've got our development? Does a solicitor make money? Oh yeah. Do the funders make money? Do the private investors? Does the architect, structural engineer? Add all that up, and I invite you to do a spreadsheet on a model development, and you'll find that basically it's all profit, it's all return, isn't it? Right the way down to the supplier. And when you think differently there, when you think about creating wealth, think how you're creating wealth for other people as well, and it will pay you a handsome return. So these are just some of the images of our wonderful chapter authors here doing amazing developments, all kinds of developments serving all parts of society. And here's the thing, for the profit for them as developers, there's around about £9 million of profit that they've created. Now, I would estimate in total that's probably more like 50 to 60 million pounds of profit that has been created for the construction industry, the professional teams, and that entire ecosystem. And if we start to think like that, the world will gather pace very, very quickly. So there are 9 different types of commercial conversions. I guess if I had a bigger screen, I could fit a whole load more in. But let's have a look at some. Because immediately what most people will think of is commercial to residential conversions. But I would invite you to think a little more holistically in terms of the need of society here. So commercial to residential conversions, I've done a whole load of those, probably over 300 of them. And it is a fantastic strategy for creating a huge amount of value add there. Commercial to supported living. This is 4 units in Twickenham. And this is for adults with special needs and learning difficulties. Commercial to supported living, great. Long-term contract, 10-year contract on that. Commercial to commercial. I'll come to this one in a little while. Converting an existing commercial property into another commercial purpose. Mixed use. So can we have retail down below and maybe convert the stock room to offices upstairs, or maybe to residential upstairs? You've seen commercial into our pension. That was a variant theme I showed you earlier on. Commercial to co-working. A bit like Regis, all been to Regis? Yeah, something like that. Again, I'll show you an example of one of those in a short while. Commercial to HMOs. Seeing a lot of momentum there, large-scale HMOs. Commercial to corporate lets. So one of my mentees, Richico, secured this property. It's in the north of England. Amazing property. For the ladies in the room, you're going to absolutely love this one. So Richico, she used to work in the airline industry, hospitality. COVID came along, she lost her job. She went up north to have a look for some property, found this property, and it was a gentleman's club, which wouldn't let ladies join. So Richico bought the building. Do we like that one? We like that one. You know, think of the self-confidence that's given to Richico, and she's taken over the world now. Absolutely incredible. And commercial to serviced accommodation. Now, these are commercial apartments, and the way these have been structured will mean that there'll be no tax to pay for probably the next 7 or 8 years. This is an incredible deal, very high cash flowing, highly tax efficient, probably till 2031, 2032. So it's not just about the value you create, it's about protect, earn, protect, invest, earn, protect, invest. That's the wheel that we're operating in all the time. And as Paul Newman said, the best gift you could give yourself is the gift of possibility. You have all these choices available to you when you're looking at that singular commercial property. This is Alex down, anybody know Guildford? Yeah, I was in the gym first thing this morning in Guildford, not too far from here. So this is a building that he acquired for just over 4 million in the centre of Guildford. And this is a commercial to residential conversion that's just started. Obviously the numbers are larger because it's in the stockbroker belt of Surrey, but a great commercial to residential conversion there, just kicking off. Tried to go for airspace rights there. Potentially could have secured airspace rights. The problem with this is the building is pretty much up to its structural load, and to actually put the structural load down through the building, one of the tenants below is Poundland, and Poundland absolutely refused access to do the strengthening of the columns and any underpinning. So it was the structural integrity of the building which meant that he couldn't do airspace rights and put the additional load on the building. Now, throw enough money at any problem and you can make the problem go away. Would we agree? Yeah, you can. But of course, as developers, time is money. Time is our enemy. And he could have fought that. He could have battled that. I'm sure it had probably taken a year, 18 months, 2 years, and the SPV probably wouldn't have survived that period of time. So just be careful what game you're in. And that's a recurring theme. There is such a thing as adding too much value, because that can take an inordinate amount of time and that erodes your profit. So just be very clear of what game you're in, what you're trying to achieve, and stick to your knitting, quite frankly. Yeah, this is Richco. That's at commercial to service accommodation corporate let, the old gentleman's club. This is Matt's commercial to corporate let. Huge amount of capital allowances. Anybody want to know more about structuring deals? You know, that was a key essence for Matt. And this is Tom and Yasmin. So this is the one I showed you earlier on, commercial to commercial. So I started working with Tom and Yasmin probably about 4 years ago now. And they came to me and said, look, we'd like a mentor who can take us through the whole journey of acquiring a commercial property portfolio. We've also would like help getting a SaaS set up and what we can do, and helping with a SaaS strategy. So they are based in Kingston upon Thames. And rather than dive straight into, right, you want to go straight into commercial property, do you? I took a bit of a situation report. We did a sit rep and worked out very quickly that they run a kitchen design company. They all design and manufacture lovely, beautiful kitchens in the beautiful, expansive homes for the great people of Surrey. It's very successful, and they are tenants in their building. They've got their own studio there, and they pay around about £100,000 a year. That's a lot of money, £100,000 a year. So the first thing we do, let's punch to the bruises. Let's see what are the quick wins here. Could you take that premises and could you move it to a building of your choice? A building that you own. A building that you own in your pension. So every year, the £100,000, rather than paying to a faceless landlord, you're actually paying to your pension. You're creating this circular economy where there's no leakage. Highly tax efficient as well. And that's exactly what they did. And they found this little old chapel, very much overlooked. It was actually owned by somebody in their SSAS pension. This person had their, remember I said you could have a SSAS since 1973? This person who owned this chapel had it since, I think it was the late 80s, a long time. And I just got fed up with starting to liquidate assets and do different things. And we structured an offer where Tom and Yasmin, they secured the building. And they also used some of their SSAS funds to do the refurbishment. Would you like to have a look at what it looks like now?
Yeah.
Pretty incredible, isn't it? Imagine having a nice glass of fizz and some canapes there, bringing your customers in to showcase the products that you provide, the design studio. The way that's helped them re-engage with their company, which is a very successful company, and they loved what they'd done before. Now they just super love it with a cherry on top. You know, it is just their pride and joy. And they know every day that their business is now filling up their pension. So again, there's different benefits here. And they're paying zero tax on that as well. This is William. So William, fantastic lad. He's my nephew actually. So I've known William since the day he took his first breath. Doing some amazing things, but actually wanted to go out and was perfectly capable of doing more than what he was doing. So he decided to create a brand called CoSpace. And CoSpace was there to rival Regis and, should I say, WeWork? Or is that, it's bad language these days, isn't it? But he was creating that facility. And he was looking for his second facility. The small one was about 6,500 square feet. He was starting to look at 20 to 25,000 square feet of commercial property. And he was looking for a wonderful commercial property that he could welcome fantastic corporates, high-end corporates. So he got looking around the M25, and he found a place called Stevenage. And so he was looking for that amazing property. Oh, and he found this. Bit of a dog. But do you know when you look at properties, you can look at them through a different angle and they look very different? This one wasn't one of those. It still looked bloody awful. So what William did with this property, he structured things very differently. Has that got distress written all over it? Yeah. It's owned by a local authority, Stevenage Borough Council. And in order for them to put it on the market, clearly with glazing like that, you know, the EPC rating is pretty much non-existent. Stevenage said that they probably needed to spend almost £2 million on a refurbishment, speculatively, to put it back on the market. Do you think many borough councils' finance directors are going to sign off a 2 million capex, but hopefully will get a great tenant? It's not a great business case, really, is it? So what William's model isn't about owning property. William saw something different in terms of taking control of the property on a lease structure, and he's building a business that uses property rather than creating a property portfolio. So the asset he's looking at is the business, not the property. So let's have a look at what he turned this property into. So he entered into a 15-year no-break, full repair and insure lease on the commercial property, on the basis that Stevenage Borough Council pretty much did all the fit out. Okay, they brought their contractor in, they did all the fit out, and you can see they're going back to shell and core pretty much across the entire property. And this is what they turned it into. The only capital William had to buy really was the fixtures and fittings, and beautifully dress that. So this, bear in mind, is a property that they don't own. They've got 15-year beneficial occupation and various clauses after that. And they're able to create this amazing asset. Now, he's not going to stop there. So he would like to create another 15 of these. And do you think the valuation on that particular business, do you think that's going to be different if Fred's kebab shop has got a couple of desks on rental, or whether you've got Goldman Sachs and JP Morgan in there? Do you get where I'm coming from here? It's about the quality of the leases. So when I said around the M25, you know, we're talking about organisations that value the outputs, not the inputs. They value the outputs that their valued employees have, and they don't want them on a train for 2 hours each way every day. So having those satellite bases so they don't have to come into London every day is massively enabling for them. And he will actually, in fact, this is being extended by another 12,000 square feet for a well-known high-end investment bank, and they're going to take the whole lot, and they're going to do all the fit out. So think about what business you're in. Are you in the business of just property? Don't just think as long as your nose okay, the value's in the property. There is an awful lot of value in the property. But when you're acquiring a business or acquiring assets and growing a business like this, when you've got 15 of these and they're kicking out some pretty punchy cash flow as well, you know, there is a business valuation. I said earlier on, I used to run mergers and acquisitions. You can see a multiple of EBITDA exit on this because you've got long-term recurring income stream. When you've got long-term recurring income stream, you've got a very significant valuation. And I would suspect this is building up to a very focused drive to accelerate for the next 5 to 6 years, and then a strong exit of many, many tens of millions. You see where the value isn't always necessarily in where you think it is. Let's have a look at another commercial conversion. This is one that we did in Crawley in West Sussex. I seem to pick the real dogs here, these buildings. I mean, this one, of course, we're all in property. We can see the potential here, but you do need to look through the asset to see the potential. This had chimney pots all around it. So people living, I suppose in the old days you'd say kids playing out in the streets. Nobody does that these days, do they? It's, we had to bring in a decontamination team into this building before we bought the strip out contractor. Okay, we brought out just over 4,000 hypodermic needles. Team that were removing the stuff, wearing gloves that are £250 each. You wouldn't deny them that, would you? I mean, horrendous job. All the drug paraphernalia, absolutely terrible to the levels that some people have in a vulnerable state, and the deprivation is just awful. So we acquired this building. Who likes a good old sourcing fee? You do? Is congratulations in order, by the way?
Oh, yes,
thank you. There you go. A fantastic sourcing fee. We paid a sourcing fee on this property of about £40,000. Is that too much? Depends, doesn't it? It depends. There's a real vibrant market here for those that know what they're looking at to be able to achieve this. This is a building that I had no idea existed until it was brought to my attention. We secured this building with a matter of days of knowing about it. So this for the conversion process, fairly straightforward. It was a subject to exchange with a delayed completion, subject to getting permitted development rights. The main core of the building was 44 apartments under PD, and then we went into planning. This was just before airspace rights came in under PD. We went back into planning for an extra floor and got 9 more apartments. So we got 44 plus 9. Lovely airy apartments. They work really well. Beautiful apartments. This is literally outside of Crawley railway station. Couldn't be any closer. So there's a few before and after shots, something that can really make you proud when you see the transformation of what can be achieved. And for those of you who like a few high-level numbers, so 53 flats. GDV was just over 13 million. Profit there was about 1.5 million after all costs, including investor costs. We still own 31 of those apartments. So it's not really profit. There's a whole chunk of equity in there. And the duration, we secured this building just before COVID. So look, we know what choppy water feels like. We didn't lose a day's working on site during COVID. We kept the site open every single day. Obviously with distance measures and things like that, productivity did drop. So it probably took us an extra 3 months longer than we'd anticipated, but we brought it in on budget. When you rally round, I think when you've got the right culture, having been involved in acquisitions, the two most important things in acquisitions are the talent, the management team that's not left behind. Don't really care about the owner because they're gone. It's the remaining succession plan and the management team. And secondly, it's the culture of the organisation. So they were the important things. Now, with our team during COVID, when COVID hit and we realised, at a point when we realised it was going to be a real challenge, we actually gathered the bank and the contractor, because our biggest risk was that the contractor would go bust. And if you've ever been a developer or an asset owner and the contractor goes bust, it is an absolute shocker. It's a nightmare. So we gathered the bank around and with the contractor, and we said, look, if you go down, we've got problems. So bank, what can we do differently? And in a brainstorming session on Zoom that lasted about 45 minutes, we suggested, well, look, can we help ease the cash flow? The bank have got the money, they want to pay the money. So can we move from monthly valuations to fortnightly valuations? And that's exactly what we did. We got a bit of a discount on the monitoring surveyor's fees, but that kept the liquidity and cash flow going for the contractor, which helped us as a developer have more stability. The bank are kicking out more cash and quicker than they'd hoped, so that's great from their perspective. So a real win-win. So sometimes human nature can sometimes be to hide the problems away. What I would encourage you to do is just be open with those problems. Everybody knows there's going to be challenges, so just be open and try and talk it through. Now, I mentioned earlier on the 100 million impact nights. One impact night is one person not sleeping in a cardboard box in Poundland's doorway. Now, if you think back to what happened at Zurich House, this is the development in Crawley. At Zurich House, what did we do as the developer? We took an old, tired building and we completely changed it and transformed it into 53 beautiful apartments to house society. Yeah, and we can all give ourselves a bit of a fist pump and a rah, rah, rah and think we've done a great job. What have we done to society's vulnerable though? Did we kick them out and send them down the road? Somebody else's problem. Down the road you go, out of sight, out of mind. And we as a board sat back and said, actually, we don't feel entirely comfortable with this. We don't have the skills to sort out the drug rehabilitation problem in Crawley, to end street homelessness in Crawley. But what we can do, a bit like going on holiday, you know, where we care about the planet, but what we will do is maybe do some carbon offsetting. We'll still fly, we'll still go on holiday, we'll still have a good time, but we consider it in other activities that we do. And this is exactly what we did here. We established another series of businesses which seek to look at that social impact. And our target here is to create 100 million impact nights. Now, if the cost of one person to society, one person to the UK taxpayer being homeless for 1 year, back in 2018 was £27,500. So index that up, and it wouldn't surprise me if that's a thick end of £40,000 to £45,000. That's the cost of counselling, clean-up, local authority, blue light services, police, NHS. Okay, so by creating 100 million impact nights, and they will be under contract. The longest contract we have is 125 years. Okay, 125 years. We will save the UK taxpayer £50 million a year recurring every year, indexed, when we achieve our target. And I was talking to somebody at lunchtime. Everything in what we do is not about property. Everything is about the story of what you're trying to achieve, who you're helping, those most vulnerable. Who would like a property for nothing? Raise your hand. Bit of a marketing gimmick, isn't it, really? Just wanted to get a bit of exercise after lunch. If I'm looking to buy, develop and sell and put a Lamborghini on the driveway, is somebody going to give me a property for nothing? No. If I'm looking to create 100 million impact nights to help alleviate street homelessness, do you think I could access property at very favourable terms? Yeah. So we secured a property for £1 a year for 125 years. That's the power of the story. So if you don't know what your vision is, if you're trying to help yourself and not trying to help society, this is that creating shared value. It's so super important. And another thing, in today's market, you're probably trying to shave off 25 basis points off your mortgage or your development finance. Yeah? Would you like to know a way where you can save 3.5% off your development finance? Would you like to know a way where you can have 0 personal guarantees? Would you like that?
Yes.
Yeah? Challenge tradition. And you do that with the power of a story. You access a different type of funds. Development finance and the banks, they're great, but they never use their own money. They're paying an arbitrage. So if they're bringing it in at 5.5% and booting it out the door at 8.5%, that's a pretty low tolerance for risk, isn't it? And if you want to put the Lambo on the driveway, good luck to you. You will be signing up to those PGs and those type of terms. But if you radically challenge tradition, if you do something different, if you have a wildly insane approach to helping people in need at a time when they really need it, then you can challenge not only the valuation on property, you can also challenge the entire capital stack. So if you want 100% loan to cost funding with no PGs, down at kind of 5.5%, 6%, it's achievable. But only if you've got a story that helps other people. So back to the point of how much profit is there in a development or a developer, you can see where this creating shared value massively impacts. It's not some soft, whiny story and the soft skills in life and public speaking. This is about heartfelt, enduring impact in society for many, many decades to come. This is a 22 apartment commercial conversion. This one gave me a real leap and a spring in my stride because it's about 4 miles from where I live. Everything else seemed to be miles away from where I live. But it just goes to show you don't have to go far. These properties are everywhere. So this is in just outside of Guildford, a small market town called Godalming in Surrey. Just under 10,000 square feet, 45 car parking spaces, and we converted that into 22 apartments a few years ago now. There's the numbers, 5.3 million GDV. We offered 2.4 million for it, and we actually purchased it at 2.2. So I used to be, for 7 or 8 years, I used to be chairman of our local scout group. And I got a call one day from one of our scout leaders who I'd never spoken to about property whatsoever. And he called me, he said, Mark, it's Ant. He said, I've been seeing what you're doing on social media, and I can see that you're involved in these commercial properties and converting them. There's one I can see outside my window that has just been vacant for ages. I've worked here for 8 to 10 years and I've never seen anybody in it. So I'm in there like a rat up a drain pipe. I'm round there in 10 minutes. And sure enough, this is a vacant commercial property. So I put the feelers out, get hold of the landlord, the owner of the property, and couldn't get hold of him. I tried absolutely everything. Tried phoning, even knocked on their office door, but it was a PO box. Really struggled. So what I did was I put a full offer in writing and sent it to their registered address. What do you think the response was? Tumbleweed. Absolute tumbleweed. So I sent the letter again. And 2 months after that, I sent it again. And then after 6 months, I got a phone call to say, Mr. Stokes, I'm incredibly sorry. We seem to have missed your letters. Would there be any chance of a coffee? You kind of do get a spring in your stride when you get a call like that, don't you? So I went round for a coffee. And he said, we really like your offer and we'd like to accept. The dynamics have now changed. I wanted to buy the property. Now they want to sell me the property. And clearly we've now got a full order book, you understand. And the economy's changed somewhat, hasn't it, in 6 months. So I said, well, look, I'm going to have to go back and look at the numbers. And our 2.4 million offer went down to 2.2 million. What kind of deposit for 2.2 million purchase to be credible? 30%? 30%? I didn't have 600,000 to put down as a deposit. Anybody else? £5,000, £5,000. And it was subject to But I wanted skin in the game from the vendor. So I said, it's subject to PD and I want you to pay the PD fees. So that got his attention. He said, I've got a problem. And where do you think he had the problem? Any guess? Cash? No? The problem that he had was the increase in units upwards, airspace rights, as we now know. He said, Mark, what happens when you put another floor on? I said, I'm not. He said, well, you might. I said, yeah, but I'm not. He said, but I want something if you do. I said, yeah, but I'm not. So we had this conversation, and in the end I said, look, give me a number, because whatever the number is, I'll sign it. But I want you to know that I will not be putting an extra floor on that unit. He said, £600,000. I want an overage. Everybody familiar with an overage? So I want a £600,000 overage should you put another floor on. I said, done. So he was fine with the deposit. He was fine with the subject to. He was fine with the planning fees. He was fine with the drop of £200,000. But he wanted to look his other business partners and family members to make sure that he'd got that risk ring-fenced. And I met him afterwards, and I said, look, I did tell you. He said, yeah, that's absolutely fine. I mean, look, there's only first world problems in this gentleman's life. The reason why he had acquired this property in the first place, he bought it in cash in the late 80s. The building wasn't empty. The building had a 20-year full repair and insure lease on it to his IT company 100 yards away. And the only thing in there was 2 BT server racks. This was about tax efficiency for a high net worth individual. How can you pay rent from a very, very profitable IT company and sluice it through in legal means for personal remuneration? So, it's a real privilege to be able to see this in action on how high net worths preserve that earn, protect, invest model.
What was the issue with the original floor?
He wanted a cut of it.
He thought you suggested it wasn't.
He thought I was going to line my own pockets by putting in another floor in it, and he wanted, because in effect the extra floor, there's a bit of structural work and things, but the land's for free, isn't it? And if you think about it, there's 2 floors there at 2.2 million.
I got the impression he didn't want it because he owned the building down the road.
No, he didn't. No, he didn't want me to make all the profit. If I did it, he wanted a share of it. Yeah. So just different ways of having to negotiate here. When I went round to see him, beautiful place in Esher in Surrey, absolutely phenomenal. When I pulled up at the gate and pressed the button, the gates seemed to take forever opening, and I'm driving in there. About 3 minutes later, I'm still driving down the drive. Leave the sat-nav on. Get there, and there's an Aston Martin Volante soft top in the driveway outside of his doors. And as I'm getting out of my car looking at his Aston Martin, he opens the double doors, because this mansion has got double doors, you understand. And he walks out and he said, oh, I see you like my Aston. I said, I have to say, Dill, I absolutely do. It's lovely. He said, do you want to see my others? So he said, I've got to be honest, Mark, he said, I've got a bit of a weakness. Whenever Aston Martin bring out a new car, I buy one. And I said, oh, that's a weakness. He said, no, that's not my weakness. I just don't sell the old one. So he took me into this 4-bay garage, 2 deep. Everything's on trickle charge, air conditioning. And he has a colour, I think it's called Coniston Mist. And Aston Martin paint all of his cars the same colour. And he's got the most impressive car. Do you remember the original Aston Martin Vantage with a big power bulge on the bonnet? Yeah, that aggressive front grille. So he's got one of those. And the number plate on it, V 8. And I think that is super impressive. The number plate is going back 5 or 6 years, probably about £600,000 for the number plate alone. Anyway, talk about that forever. But yeah, quite incredibly gifted individual. He has got a PhD. He runs a pharmaceutical company. He's got a building at Cambridge University named after him. His hobby is supporting the STEM subjects. And he supports the STEM subjects with telescopes around the world. So he's got a telescope in Hawaii, in the Philippines, and in South Wales. Bit of a diverse culture, isn't it? So he obviously wanted one fairly local. And absolutely incredible. And he's the only person to date that I've ever met that's got a meteorite named after him. I just wondered what I've been doing with all my life, to be honest, you know. But when you've got high net worth individuals like this, do you think that's a great source of counsel? Great source of wisdom. That is a knowledge pool of wisdom. The guy made all of his money in IT and services back in the day. And he had cancer and started in pharmaceuticals and biotech to try and find various solutions to cancer. I mean, the guy is just pushing boundaries and traditions at a level. You can learn something from people like that. But their absolute clarity, focus and drive is incredible. I've learned so much from him. It's a real privilege. That's the location review. Now, pretty much, you can see the chimney pots on the left-hand side, but pretty much everything else is a business park. That used to be where Brabham Formula One used to be back in the 70s or something. There were only 2 properties in there which were converted to residential when we did this particular one. But we could see the way the world was going. There are now only 2 properties in there that are not residential. And interesting, the EV charging came up on your slide. Thank you for sharing that earlier on. I walked around that whole area and it's now residential. And I looked at outside, there was a window open and somebody had thrown a curly cord out and was charging their car up. So I walked around that entire area and I counted 685 car parking spaces. How many electric vehicle chargers do you think there were across 685 car parking spaces? 0. So again, the way the world's going, think of the amount of electric powertrains now on the market, and think of it's now residential. Is that an opportunity? So in our analysis, we have lots of additional lines where you can create that additional income, car parking spaces, car parking fees and services, outsource that on a lease basis, leasing individual car parking spaces for electric vehicle chargers with, grid serve and the like, panels on the roof, all different kinds of areas, external gardens, storage units. So really looking beyond just the GDV of the apartments. Quite often you can add at least another 10% to the GDV by really sweating the asset in different areas. So that was the existing, dull, dark windows, heavy tinting, classic office. So you can see top left, bottom left, that's the finished product. We did put, you'll notice, got some balconies there. The scheme worked without balconies. But we did go back in, went into planning, took about 8 weeks, and got planning for patio doors at the back, and they were the first units to sell, to be honest. We sold the lot, including 3 to ourselves. We still keep those. We don't hold the units. When you're doing anything at this scale, you do not buy, develop, and sell. Sorry, you don't buy, develop and hold. Okay, from a tax efficiency perspective, it's a recipe for a disaster. You'll pay too much tax, you won't be able to reclaim your VAT. So we're always selling and using group stamp duty relief. Layouts, for those that are interested in layouts, probably not something we've got time for, but the column structuring, we had to work there. And I suppose a key point here is there were fire escapes at either end of the building. So you've actually got on each floor, or ground floor, you've got 3 points of entry. So we didn't need corridor space, and we just had all the points of entry from the outside of the building. There's finished products, nice daylight cells in products to take the tinting off the window, allow the size of the windows to do their work. And around about 850,000 for ourselves and our investors who are on a profit share on that particular one. So the moral of the story for me, and you might want to write these down, this is critical if you're to approach commercial conversions and indeed the business of property. The 3 S's. Number 1, structure. You've got to have the right structure that you embrace this. Structuring your funds, structuring the asset, structuring the company, the holding company, all these elements must come. I cannot stress structure enough. Number 2, structure. Guess what number 3 is? Please get the structure right. Get some quality advice. You make your money on the way in. You crystallise your cash on the way out. It's all about that structure on your way in. And as Sir Frank Williams, sadly we lost Sir Frank Williams 3 or 4 years ago now, does it make your car go faster? Focus on what's really meaningful to you and your goals. Don't get dragged up with other people's hype and focus. You are enough. It's your goals. Having clarity on those lofty goals will set you on your way. And make sure you don't drift into somebody else's path of a different risk-reward appetite to you. There are so many levels of return, not just for you, but for your investors. There's the return on your capital, the return of your capital, and all the other experiences that go with that. So look, as an offer, myself or one of the team will happily have a free consultation with every one of you. I do some training. I've been a mentor since 1998. If anybody wants to book a slot, then please feel free. And that's about as salesy as Mark Stokes gets. I hope that's been intriguing and of interest and thrown maybe a different perspective on the world of structuring. So thank you.
Before we go, have we got time?